wonderful to see you here again today, Peter. It's been a week. It's been a wild week. There's been plenty happening around the markets. Here on the show today, you'll be talking a little bit about volatility. I think that's probably the prime subject that we'll cover. Plenty of it, plenty happening. Talk me through it.
Well, good morning, Will. Yeah, it's been an incredible week. Really, it seems to be building each week leading up to that summer Christmas period. What we saw over the last 3 weeks have been outstanding for a trader, but in the last matter of days, we saw that quite a disappointing number as far as non-farm payrolls on Friday night.
Well, that was disappointing. I mean, in listening to any economic podcast that's out there, whether it be the BBC, CNBC, CNN, The Economist, everybody's out there saying, hey, you know, these job numbers, they just weren't great. They were too low. They were half of what was expected. But what's the real deal? Because then they go on to discuss a whole bunch of other stuff. And in the end, it seems like it doesn't matter.
Well, it matters in the sense where the growing economy, and is everyone fully employed, and has everyone got a job that wants a job, and there's the job opening, so that side of it. Revenue to the government as far as taxation and employment and mental health and all of those sort of aspects. So yeah, you know, it's a dilemma, and certainly there are many different lenses that you could use to describe it or to decipher, but when you've got analysts saying you're going to hit a 500,000+ and you get 200,000, then it does underwhelm. And I think that's from a economic standpoint, it puts a little bit of a dampener on that mindset leading up to Christmas.
Certainly does. But when you look at some of the ways it's been explained, I mean, when you look at Biden, the way he's explained it, when you think about the Fed and how they've explained it, they didn't feel like it was actually making as big an impact as perhaps the 50% or the 100% differential actually suggests.
Yeah, you're probably right. Well, you are right, because they've got it. But, you know, it's a little bit like a good politician, you know, and we've had many over the years that have been sprayed in Teflon that nothing sticks to them. So maybe that the Fed or Biden have a similar dose of Teflon that they can do the spin and.
Yeah, it's over. Yeah, no, I hear your point. So look, I guess my point really is it really an indicator? And if it's an indicator, what's the signal and what's the trade?
Well, it's an indicator, and what it does, it put a little bit of softness across those US equities, and I think that spooked the markets a little bit. Certainly the crude market came under a bit of power to the downside, big sell-off, but it's since had quite a very strong rally over the last 48 hours, and so has US equities. They ended very nicely this morning, well and truly bid up, Will. So they've been very positive trades for traders. US dollar index has strengthened a bit, and Monday morning, we were sitting at around about 69.9 for that Aussie dollar. That was the low, I think, at around 10 past 9. And here we are 49 hours later, and it's at 71.19. So it's had a big solid move again, the Aussie dollar. So from a trading perspective, great opportunities, and just, you know, strap yourself in and enjoy the ride.
Yeah, bold it on. Now, listen. Let's take a good look at that. At that story around the US Consumer Price Index. Only way is up is the headline. CPI expects to hit a 4-decade high in November. Okay, so we've come through November. We're rolling into December. It actually does look like it's still outperforming, and the forecast still looks strong.
Yeah, well, there we are. We think it'll be around about that 6.8+% year on year. So when you've got a 7% inflation rate and gaining momentum, then that really is not a good sign for any economy with record low interest rates. So naturally, what does the Fed do? Do they pull the taper quicker off the table? And everyone's saying, well, that probably will be the case. There's 2 nearly baked in rate rises for 22 from the Fed, and some are saying there'll be 3. I've heard other economists say you might see 4. I even heard a wild card say you might see 5 for the year. Who knows? We got that, and that's coming out on Friday. Will, we got Thursday. We got data coming out of China for Chinese CPI data. That'll be running at around about 2.5% year on year. So a big differential between the two nations. China at 2.5 and US at nearly 7.5. So there's the storyline or the differential between the two.
All right. Well, you touched on Aussie dollar, US dollar, and the the dip and the recovery. So a bit of trade signal there. I mean, if we were looking for a signal, if we go back a couple of days and we say, okay, how could I get on that trade? What is the news environment saying to you that would actually make you think that is going to dip and recover and therefore create a strong signal for a trade?
Well, I think you had to look at that US dollar. We make reference to it, and that's the big kahuna. So that US dollar index was sold off. It bounced from the bottom, and really it, I think, offered from a currency trading perspective. It was exhausted to the downside, that Aussie dollar. It bounced from the lows just under 70 and was ridden hard down from 74. So 74 to 70 and back up at 71 and a bit. It just demonstrates again over the last couple of weeks, huge volatility across that currency sector. How do you get involved? What do? You just keep on watching the markets and appreciate all of those inputs as far as economic indicators, will the fundamental news, and then look at your technical analysis. On our site, xm.com, we run, as you know, 27 hours a day of live TV.
Oh, you certainly do.
Educates. No, but from an education standpoint, and I
agree with you. But I look, without getting into the education, I mean, I think we're talking here about signals and trading opportunities, and we're trying to kind of make sure that people don't have to sift through hours of it, but they can take the bite and go and use it. So if we're looking about actionable intelligence, and we're looking at those charts. I guess, as you say, you needed to be in it. You need to be watching those key data points that lead up to that trading signal. Pete, let's race forward. Omicron derails dollar, yen's a cent. Sure, been a story. Great. 50-day moving average is sort of suggesting that there's perhaps the peak at 115 in November was kind of the peak. We look at that, and if we don't clear the hurdle, and we sort of look at the whole dollar slippage thing, the US dollar Japan story. There is a little cliff there, around about the 20th of November.
Absolutely.
And at the same time, it hasn't dropped that far in real terms, but mate, it would have been enough to scare a few people.
Absolutely. And then, as you're pointing out, Will, those big moves, and they're the ones that traders, they're the glory trades. If you pick a couple of those up a month, it satisfies everyone's back pocket. As Rene Rivkin said, you'll never go broke taking a profit.
That's a good line. Now, listen, let's talk Fed. Backtracking on the hawkish shift. We've spoken about China CPI data. I think the summary here is that perhaps there's a positive open as the Omicron fears are fading out of the market.
Absolutely. So as that dissipates, then we saw that strong rally overnight with US equities, NASDAQ very, very strongly bid up, Dow up, S&P up. So yeah, they were sold down Friday night. Monday was a little bit of a wake-up call, and here we are Tuesday night, Pearl Harbor yesterday. And thanks for my birthday present yesterday also, Will. Very much appreciated.
Mate, Pete, as you know, Australia Post is performing extremely well. It's been optimised for no delivery. Mate, don't expect to receive anything anytime soon.
Thank you. Well, I noticed there was a Bentley downstairs with a ribbon around it, and I'm very grateful for you guys putting the hat around and sending it over.
Well, look, mate, if you roll down to Justin Hems's fine establishment at the end of your street, it's probably his.
Well, could be. I couldn't see the keys.
But listen, wrapping this up, oil surge, gold's holding firm. But I want to finish today on geopolitics. Let's talk about what's happening. The US, its European allies, the sanctions targeting Russia as it's really seriously kind of swarming around the Ukraine. We're talking about energy here, aren't we?
We absolutely are, and you're leading into that northern hemisphere winter. December, naturally, you can probably put your mind back, those cold, dark days that you feel in Vienna on the streets there, the cobblestone streets that, snow and December, January, February are bleak over there. So the drawdown as far as energy for heating, natural gas and all coming through from Russia and so on. So you've got, again, you've got naturally the issue as far as Ukraine. That doesn't seem to be going away. You've got the geopolitics involved with Russia and all of those components and sanctions. So, yeah, I think it's going to be an interesting winter. And let's just hope that the supply of natural gas keeps on board and they don't derail that, because there'll be many millions or tens or hundreds of millions that'll be greatly impacted, Will.
All right, Pete, wrap it up for me. 30 seconds on everything that matters.
Crude oil had a nice bounce to the upside. It's been a glory over the last 24 hours, 36 hours. It's been boom. Keep a close eye on that continuation as far as US equities uptick. Could be a good day across Asia today. I'll be interested to see how that moves for Asia trade, Asian equities, and yeah, hold the wheel tight. Inflation numbers will. So yeah, let's roll on. Hopefully we see a Santa Claus rally continue up till Christmas.
All right, let's look for that. Let's hope for that. Let's roll back in next week and see what actually happens. Pete McGuire, thank you very much. Speak to you soon.
Thank you, Will.